and welcome to the Manappuram Finance Q1FY22 earnings conference call hosted by Monarch Networth Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Alok Shah from Monarch Networth Capital Limited. Thank you, and over to you, sir.
Thank you, Melissa. Good evening to all. On behalf of Monarch Networth, we welcome you for Manappuram Finance Q1FY22 results call. We have the entire management team of Manappuram on the call, represented by Mr. VP Nandakumar sir, MD and CEO, Ms. Bindu ma'am, CFO, Mr. B.N. Ravindra Babu, MD, Ashirwad Microfinance Limited, Mr. Yogesh, CFO, Ashirwad Finance Limited, Mr. K. Senthil Kumar, Head, Vehicle and Equipment Finance, Mr. Sandeep Kumar, COO, Manappuram Home Finance, and Mr. Bikash Kumar Mishra, CFO, Manappuram Home Finance. Without taking much of your time, I now hand over the call to Nandakumar sir for his opening comments, post which we can get into the Q&A session. Thank you, and over to you, sir.
Yeah, thank you, Mr. Alok Shah. Ladies and gentlemen, welcome to Manappuram Finance Q1FY22 conference call. Hope you, your family and friends are safe and healthy. Our previous call to discuss about Q4FY21 results was held on 26th May against the backdrop of a rate change second wave that affected very badly. That was the time when many of our branches were not functional because of the widespread local lockdowns. Since then, there has been good improvement, and today we work at full capacity. After 8 straight months of GST collections exceeding the rupees 1 lakh crore mark, the revenue collected in June pertaining to the economic activity in May is to 93,000 crores. With the ebbing of second wave, the economy appears to have regained momentum, and the collections in July have topped the 1 lakh crore mark once again. However, the GST collections are essentially a proxy for the formal sector, and our experience has been that the informal sector, from where we draw the bulk of our customer base, suffered more damage. At the same time, the overall recovery in the economy is now being felt in the unorganized sector as well, as we have begun to see growth coming back. In the last call, we had also mentioned how the price of gold had corrected sharply from the peak of August 2021 by the end of the fiscal, which had an impact on our business. The overall trend in gold prices remained weak in Q1 as well, along with the physical disruptions which prevailed in Q1 that affected new customer acquisition. All these factors had an impact on our business volume, especially gold loans. As you know, gold loans have the dominant share in our company's business mix, and about 67% of our loan book against gold. For the quarter, our gold loan AUM declined by 6% year on year and about 13% Q on Q, being the impact of the combinations of factors I mentioned just now. Further, we also observed that in response to the stress in their general loan book, Many private and PSU banks, as well as other non-gold loan-focused NBFCs, gave an extra push to their gold loan offerings by competing over price and tenor. In our case, we saw that some of our high-value customers with loans above rupees 1 lakh were especially targeted by takeover by these other players. To stem the attrition in this segment, we have now identified the areas where such attrition was seen more. We have launched special schemes for these areas targeting high-ticket borrowers on competitive terms and conditions. I can say that the results are already visible in terms of renewed momentum of growth and new customer acquisition, and we are confident the trend will be sustained. The stress in the informal economy and weak gold prices led to higher auctions as well, as we are mainly into short-term gold loans. We recognize the stress in the portfolio early, and we initiate auctions in time so that the credit costs are minimized. As a rule, the price risk is better managed in the short-term gold loan compared to the one-year product offered in the market. Going forward, as I said, we are already seeing growth coming back, and barring further pandemic disruption, we are confident that it will be back to business as usual. Some other key performance highlights for Q1 are as follows. Consolidated AUM at 24,756 crores, is lower by 2.3% year on year, and 9.1% Q on Q. Mainly due to the weakness in the gold loan portfolio, which we have discussed. Our gold holding stood at 58.1 tons. The tonnage degrowth during the quarter was about 7 tons. Our microfinance subsidiary, Ashirwad Microfinance, ended the quarter with AUM crossing 6,000 crores, a growth of 20% year on year and 1.1% over the preceding quarter. During the quarter, we prioritized asset quality over AUM growth, given the stress in the system. Going forward, we believe the worst is behind us, and barring further unforeseen eventualities, the outlook is quite positive. Our commercial vehicle business reported an AUM of 1,045 crores, which is lower by 0.7% Q on Q and by 17.8% year on year. Collection efficiency was at 87% in May and 105% in June. Our housing loan portfolio, which had a total book of 668 crore, which is up by 0.3% Q on Q and up by 6.5% year on year. Collection efficiency was 79% in May and 87% in June, and fast improving. On the liquidity front, we are placed comfortably, and we continue to receive funds from all routes at competitive rates. We do not expect any funding challenges to come in the way of our growth plans, and we are comfortably placed with our ALM, which we monitor closely. Finally, We are reporting a consolidated quarterly net profit of 437 crores for Q1 FY22, up by 18.7% year-on-year, although sequentially it is down by 6.7%. Thank you. Now over to our CFO, Ms. Bintu, for a detailed set of numbers.
Thank you very much, sir. Thanks to all our stakeholders for attending the quarterly update call. We hope you are doing well and staying safe. Since Q4 2021, the industry has been making a return with significant increase in disbursals and collection efficiency. However, the recovery had been hampered due to lockdown across all the geographies and fear among the employees and customers. Now coming to the operational review, we are carrying surplus liquidity across all the businesses. Cash and cash equivalents on hand on a consolidated basis was rupees 2,893 crore and undrawn bank line was rupees 7,320 crore as on 30th June 2021. Our CP exposure has come down to 6% against 9% in a year ago. Borrowing costs now more stable due to less availment of new facilities. Our consolidated AUM for Q1 was rupees 24,756 crore, down by 2.3% year-on-year and down by 9.1% Q-on-Q. The Q-on-Q decline largely by gold loans. This is on account of partial lockdowns and the auction of collateral as well as the higher than normal redemptions. As you would have seen, gold prices have been declining globally, driven by the outlook towards higher interest rates. We believe that we are extremely well positioned to deal with any significant volatility in gold prices with average LTV of 65%. The short tenor of our gold loan product, which is 3 months, on an average results in early recognition of NPS compared to other players in the market who offer longer tenor gold loans. Consolidated profit after tax was rupees 437 crore, up by 18.7% YOY and down by 6.7% Q-on-Q. Despite the significant adverse effect of COVID phase 2, ROE on a consolidated basis was 23.4% and ROA was 5.8% for the quarter. About the gold loan business, which constitutes 67% of consolidated AUM, the AUM declined by 6.8% YOY and down by 13.3% Q-on-Q. The detailed explanation for the decline is provided in page 23 of the investor presentation. Gold holdings at 58.1 tons. During the quarter, we were able to add only 2 lakh new customers as against 3 lakh in last quarter due to lockdowns and limited operating hours for our branches. Gold loan average ticket size and average duration was rupees 42,749 and 114 days respectively. The total number of gold loan customers stood at 24.06 lakhs. The gold loan book at rupees 16,540 crore. Our weighted average LTV stands at rupees 2,850 per gram or 65% of the gold price as on 30th June 2021. Gold loan disbursements during the quarter at rupees 35,419 crore compared to rupees 44,630 crore in Q4. The online gold loan book accounts for 53% of the total loan book. Coming to MFI business, the AUM stands at rupees 6,053 crore, up by 1.1% Q-on-Q and up by 20.1% YOY. And this business reported a PAT of rupees 7.7 crore compared to rupees 4.1 crore in Q4 FY21. Our collection efficiency from MFI business was at 70% in June, in line with the industry, and disbursements during the quarter was rupees 1,181 crores. MFI collections are steadily improving. The company has a capital adequacy of 22.7%. Coming to vehicle finance business, we reported an AUM of rupees 1,045 crore, which is flat Q-on-Q and down by 17.8% YOY. Collection efficiency was 87% and 105% for May and June. Home loan business had a total book of rupees 668 crore, which is again flat Q-on-Q and up by 6.5% YOY. Now operates from 68 branches and reported a profit of rupees 2.2 crore during the quarter. Collection efficiency 79% and 87% in May and June. Collection efficiency for the quarter was 84% in compared to 96% in Q4 FY21. Loan to NBFCs at rupees 144 crore and loan to SME and others at rupees 307 crore. Provisions and write-offs for the standalone entity during the quarter stood at rupees 30 crore compared to rupees 12 crore in Q4 FY21. We have provided rupees 15 crore additional due to COVID-19. Our gross NPAs at 1.96% against 1.92% Q4 FY21. The board declared an interim dividend of 75 paise for the quarter. Our capital position is strong and the company is well capitalized with a capital adequacy ratio of 34.4%. Company's consolidated net worth stands at rupees 7,662 crore at the end of the quarter. The book value per share stood at rupees 90.5. Thank you. Now we can go for the Q&A session.
Ma'am, would you like to begin the Q&A session?
Sure.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the first question from the line of Dhaval Gada from DSP. Please go ahead.
Hi, sir. Just a few questions. First is on the gold loan, stock. So basically, we saw this quarter the stock of gold come down from 65 ton to 58 ton. Approximately. Could you explain the sort of drop between the pressure that you saw in the high value gold loan customer segment that you talked about? How much was the volume loss from on that account? Second is the auction related loss in tonnage, and any other related impact because of which this net decline is, and also how much was the fresh disbursement during the quarter in volume terms. So that is the first question. The second question is related to the restructured loans. Can you give the stock of standard restructured loans in the MFI segment, vehicle finance segment, and the housing segment? And then I have a follow-up. Thanks.
So the stock of gold decline was, our gold loans are of a short tenure, 3 months. We have granted loans at the peak of the price, and these have come for auction during this period. And this has become overdue. Yes, the company's policy is to maintain a high asset quality. When we started the auction procedure, many of the customers had scrapped their loans. Along with that, there was some auction also. That was the reason for the decline. And now the branches are open, activities have started, we are seeing growth. And with the growth trend, or what we witnessed in the recent days, we see the scope for a growth of around 15% during the next 9 months, during the next 3 quarters. So the auctions are also coming down. And we have some growth focused activities also, like for targeting high ticket loans. So we have initiated several things, including communication with the customers through publicity and the other channels of communication like online channels as well as local advertisements. So we hope the growth will come back soon. And our strategy has been mainly to manage the price risk. So we can see the price risk is very much reduced for the 3-month gold loan product compared to 1-year product in the market. So see, there is a 9-month difference between 3-month product and 9-month product. So this difference is going to see in the market in the coming 2-3 quarters when we will be able to grow. Regarding the numbers, Bidu.
Yeah, so Dhaval, we have provided in slide 23 how the new customer acquisition is different between Q4 and Q1. Q4 we added 3.1 lakh new customers, which is 2 lakh during this quarter. But after June, when things opened up, this is 40% growth compared to the earlier period. So we hope this will help us to increase the gold loan business.
Ma'am, what was the auction that we saw, amount of gold auction?
So last year we had the maximum disbursement in Q2, which is nearly 1 lakh, nearly 93,000 crore. So if we see as a percentage of AUM, as a percentage of disbursement, this is 1.5% auction. So in absolute amount, this is 1,500 crores during this quarter.
1,500 crore is auction and 1.5 ton. Sorry, is that number correct?
1.5% of disbursement. In terms of tonnage, it is 4.5 tons.
4.5 tons. Okay, got it. And last quarter, if I remember right, you had auctioned 1 ton.
Yeah.
Right. Okay. And the second follow-up for this is, so you talked about high value customer. Just are these the customer base that the banks target, and was rate one of the reason why we were seeing this pressure? If you could sort of pinpoint what was the reason this pressure was witnessed in the last few months.
See, banks had an advantage, some leeway with regard to the higher LTV up to 90%, which is over by March. And with that LTV, 90% LTV at the highest price, the banks are feeling the pressure now. Because of that pressure, I don't think that the sort of competitive advantage the banks have is sustained. I think that is vanished.
No, sir, sorry. My question was the pressure that we are talking about in the last 3 months on this segment of high ticket gold customer base. So this pressure came on account of was it rate of interest, or was it tenure, or was it higher LTV? So what was it trigger for this pressure, especially in the last 3
years? All these have helped the competition in general to gain the ground, and then we think it is over. That phase is over. All the three, whatever you have mentioned.
Okay.
Yeah.
Okay, fine. Sir, and sorry, on the restructured loan, if you could provide the breakdown between the three businesses, that would be very useful. Yeah, that was my last question. Thanks.
Yeah. So in the standalone entity, we had very few loans considered for, or we have offered the restructuring because the delay in collection for May and June. April things were almost normal. May and June, in fact, our employees also were not able to reach out to the customers for collection. So wherever we felt a genuine request, we have considered. Otherwise, as usual, we are taking an upfront provision, and we will focus on collection. So based on the request from the customers, we will do few cases only. So we will see the timeline is available up to December. So we will monitor the trend in collection efficiency, because immediately after the quarter end, the things are opening up. So we know that this will delay the cash collection. So our focus at this point of time will be more on collection. Then going forward, we will see.
Sure, ma'am. Thank you and all the best.
Thank you.
Thank you. We have the next question from the line of Prashant Sridhar from SBI Mutual Fund. Please go ahead.
Yeah, thanks, ma'am. Just two questions on my side. So on this 1,500 crores of options, what is the amount of principal and interest related to these accounts?
Yeah, 1,500 crore principal.
Okay, so we would have recovered 100% of principal and zero interest. Is that correct?
Yeah, there will be small principal loss if there is any appraisal issues, etc. Other than that, we have recovered 100%.
Okay, and
because of the short-term nature of the product, we are able to realize. That's the reason why we are able to protect our yield. See, there is no fluctuation with regard to yield.
Right. Sure. And on the MFI, how much will be the debt coming up for repayment in the next 1 year? And Manappuram Finance would have given any loans to the MFI? And just one additional point, I think last time we had reported 4% restructuring in MFI and 8% in vehicle. I understand there is no other restructuring this quarter. That's it from my side.
Yeah.
There is no loan from the parent to the subsidiary. See, on an average, the life of the loan is around 18 months. So our loan book currently is 6,000 crores.
Okay. So what would be the quantum of debt that is maturing over the next 1 year in the MFI?
That's,
Yeah, Yogesh, you can give the numbers.
Yeah. So you are talking about the AUM which is coming for maturities, or roughly around 40% of
Borrowing. Yogesh, it is about borrowing.
Borrowing. So for borrowing also, we have generally currently our average tenure is more than 24 months. So roughly for next 1 year, about 30% of our borrowing will come for maturity, for which we have a backup lines as well.
30%. Okay. Sure. Thank you so much.
Thank you. We have the next question from the line of Prateek Agarwal from ASK Investment Managers. Please go ahead.
Hi, everybody. A few questions. One, this time around in the COVID period, we saw a dip in online gold loans. I would have thought that when the closed, people would have left that product up. So that was one. Second, on the MFI side, now that things have opened up and on your presentation you're talking of much higher collection efficiencies in July, do we expect further stress? Do we expect write back? What should be the expectation going forward? And third, of your other two products, housing loan and vehicle finance, have they stabilized and now are we on the growth path, or they are still being, stabilized?
So, this COVID period, COVID first and second, the major difference is, the COVID first, it was completely locked and people wanted the money. So, using the online work platform, they have, and the price also was going up. Using that opportunity, they have availed more amount on the same platform. During the second COVID phase, what has happened is the close down of branches were intermittent, and the price has come down. And many people who wanted money, they use this occasion to who are cash starved. They use this occasion to scrap the gold in the market and realize money. This was the difference. That's why during the first phase of COVID, there was a sharp increase in the online gold loan. And during the second phase of COVID, there was no much increase because when the branches were open and the price was down, there was a redemption pressure for many of them for scrapping the gold in the market.
Sure.
And the CV, home finance assets, the collections are steadily improving. And as I mentioned, month on month, we see 15 to 20% increase in collection. And I think it is because of, and in vehicle finance, last month it was 105%. This month it is expected to cross 110%, 10 to 15%. So it means that the ideal collection is also coming. Microfinance also, it is steadily improving. So with the opening up of the economy and a lot of activities, these are steadily improving.
So we will start to grow here. We have been holding the.
Yeah. So vehicle finance, we are disbursing now currently around 100 crores a month, and this is slowly improving. Similarly, in home finance also, which was we were not able to disburse, but the current level we have reached a disbursal level of around 35 crores, and it is steadily improving month on month. Microfinance also, yes, our more emphasis is on collection, but we are also growing slowly. We hope we can attain a reasonable growth there also.
So microfinance, what would be the expectations on provisioning, write-offs, etc. next quarter?
Yogesh?
Currently, as we speak, we have July and first few days of August, we are consistently at 95%. But it's too early to comment on anything, as we expect it has to steadily improve month on month. So we provided 90 crore in first quarter. Going forward, provision should come down, hoping that this collection efficiency trends continues and improves from here on.
So, just one directional thing, sir. At the end of this fiscal, do we expect gold loan AUM to be higher than last year? No, the 15% growth that you spoke about was over this quarter or was over fiscal 21 end?
It is fiscal 21 end.
From this quarter.
From this quarter, 9 months.
9 months we are expecting this growth.
Three quarters from starting from July.
No, correct. But the base on which you are talking of 15% growth is Q4 end of last year or Q1 end of this year?
You see, as on the closing of the first quarter.
So de facto, we will go back to where we were at the end of the year.
Yeah.
Okay. Thanks.
Thank you. We have the next question from the line of Raghav from ADIA. Please go ahead. Mr. Raghav, your line is unmuted. Please go ahead. Mr. Raghav, if you have muted the line from your end, please unmute and proceed.
Hi, can you hear me?
Yes, please.
Hello? Yeah,
Yes,
hi,
sir.
sorry. I had muted it. I was just asking on the gold loan AUM side. I'm sorry, but maybe the explanation was not fully clear. But could you help us understand the AUM in terms of price versus tonnage? The drop in tonnage is what stands out, right? So 72 tons at the end of FY20 came down to 65, and then now it's 58. So what does that mean? Is it that customers are unable to sort of pay back and hence there is auctioning of the loans, or can you help us understand this tonnage reduction as a volume metric?
See, the customers, our target audience was feeling so much of pressure because of the 2 rounds of COVID, which is continuing for the last 1.5 years. In the meantime, you see the price of gold also has increased. So to maintain to have the same amount, they need to bring a lower quantity. And because of the short-term nature of our gold loan, the customers' turnover is relatively higher. So because of that, the gold loans are repriced continuously, bringing down the risk also. So that's the reason why the reduction has happened. And the gold price, as the gold price is down, we see steady growth in collateral also. Now it has come down to 58 tons. This also is steadily growing. As I mentioned, during the next 9 months, that is second quarter, third quarter, and fourth quarter, we see the prospects for growth of around 15%. Simultaneously, the collateral also will grow.
So just to make sure I understand, it's because of underlying stress that some of the customers are not able to pay back and hence the golds are getting auctioned, and that will get accelerated as the price of gold reduces, so LTVs go up. That's fundamentally what's driving this. And once gold prices stabilize and the COVID stress goes away, you think normalcy will return?
Yeah. Now our LTV is around 63%. Our LTV is around 63% at the current price. Yeah. So it means with the growth which I have projected, the collateral also will grow.
Yeah, the redemption should have been compensated if the new customer acquisition is similar. Because of the lockdown, we have seen dip in new customer acquisition also. Q4 we had new customer of nearly 3.1 lakh, which has come down to 2 lakh during this quarter because of less number of working days. Otherwise, this would have been supported for the decline in tonnage.
Got it. Thank you.
Thank you. We have the next question from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yeah, thank you for taking my question. My first question is to Bindu ma'am. Ma'am, in the last quarter, if you remember, we had given some kind of a bridge between our Q3 and Q4 gold AUM. Possible if we give some kind of a bridge, even if it's approximate, what is it that kind of contributed to this gold AUM and the gold holdings decline? Auction related, withdrawal related, what was it because of competition from banks and some of the non-gold NBFCs which were offering gold loans at lower prices and lower interest rates?
Okay. During the quarter, the decline in tonnage is around 11%, and in terms of AUM, 13.3%. So, mostly the price remained stable, and the decline largely happened in April when the price was very low. We have seen 23% decline from the peak gold price when the maximum auction and this redemption happened. So the other details I can share separately. The other breakup I can share separately.
Sure, ma'am. The other thing that I wanted to check with you is what is the interest accrued component as on Q1?
So 740 crores.
740 crores. Okay. And the last question that I had is, and this is also to Nandakumar sir. Sir, I mean about a month back when we were trying to do some kind of channel checks around the gold loan demand, we were given to understand that while the demand was picking up very very swiftly in northern India, because of continuing lockdowns in southern India, the demand was still, I would say, tepid. And so when I look at our branch split, and I have our FY20 branch split, about 63% of our branches were in the southern region. So, I mean, would it be also fair to say that, I mean, lower acquisitions that we saw during Q1 was also a function of our stronghold in the southern markets, and how is the southern market demand looking like now in August?
Yeah, as you have rightly said, our presence is rather, two-thirds of our presence is skewed in favor of South India. So, as pandemic conditions were more severe this time in North India, North Indian branches remained closed in many places. That also has been a cause for the decline. At the same time, we don't want to take the price risk. So the recoveries auctions were happening without any interruption. That's why we are able to maintain NPA, the standalone book NPA, including other products at 1.6%. So we are out of the price risk, and now southern India has opened up, and we see good growth happening in southern India also. In all the 5 states in southern India, we see good growth.
Okay. Sir, if I can squeeze in just one last question here, because I mean gold prices were at their peak sometime in August and September last year, and given that you are saying that a large part of the portfolio where LTVs are greater than 80%, you have already kind of taken those risk management measures, and the proportion of that high LTV portfolio is down to about 6%. So fair to say that at least, I mean, those loans which we would have done around August and September last year would have largely run off or would have been auctioned by now?
Yeah. The higher LTV loans all are out of our books. So what we have given importance is managing the price risk. We were skeptical about the gold price, and we believed that the gold price would come down. So our focus remained to manage the price risk. So that's why these short-term loans and timely auctions to clear us out of this price risk. Had it been 1 year, yes, we would not have faced such a decline as in the market. But we have a big worry before us. After 9 months, what would be the scenario about gold price? We can't predict. And for these customers, many of them may not service the loan. They will accrue the interest, and after 1 or 2 quarters, we would have faced. Now we don't have that worry. We are looking for towards growth.
Sure, sir. I think that is very, very prudent. Thank you so much and wish you the very best.
Thank you.
Thank you. Ladies and gentlemen, before we move to the next question, we would like to request participants to limit their questions to one during the initial round. We have the next question from the line of Anand Bhavnani from White Oak. Please go ahead.
And thank you for the opportunity. Just wish to understand how you seeing the finance business at this juncture, and if you can give some color on, what's the collection efficiency and overall, you see the credit cost for this business in. Hello, am I audible?
Sir, the audio from your line is breaking. Could you repeat the question?
Yeah. The question is on microfinance, and I wish to understand, if you can give some color on how do you see the credit cost in the microfinance business for the financial year 22, and how do you see the AUM growth potential? Any color on the microfinance business?
Yogesh, can you share?
Yes, sir. See, in first quarter, since we have a lockdown, so our collection efficiency was average efficiency. We registered 75% in Q1, where we took 90 crore of a provision. But as we speak, we are at 95%, and if we hope that we at least maintain or improve the collection efficiency here on, we may have a lower provision in next quarter. However, I mean, it's very difficult to put any number or any estimation to credit cost. Last year we took around 5%, but I mean, this year it's very difficult to estimate at the point. But if the situation improves from here, it could not be the provisions in next quarter could be lower than current quarter.
Okay. And what percentage of our microfinance customers would have requested a top-up in Q1?
So top-up loans we don't give, but we only give to the existing customer, we give them a new loan. We have not given any top-up loan as such.
Okay. So what percentage of our existing customers would have requested a new loan?
No, so they only get a loan when they are closer to maturity. When they have only 3 EMIs pending out of 26 EMI, they are eligible for renewal. So that is what we call as a conversion. That is what we have given.
Okay. Thank you, sir. I'll come back in the queue.
Thank you. We have the next question from the line of Milind Agrawal from SBI Mutual Fund. Please go ahead.
Yeah. Hi, sir. Thank you so much. So just a question on the competitive aspect. So, over the last year and a half, banks have incrementally been more competitive, but that's a business where maybe the ticket sizes are slightly higher and the lending fees are lower. So from our side, is there a thought process to sort of cater to that business incrementally where maybe we do slightly higher ticket size lending, but one that comes at rates that are lower than the rate that we have on the book? Any thoughts there in terms of changing the structure of loan that we have?
Yeah. So we analyzed and found where we lost the high ticket customers. Where there we have introduced attractive schemes just to attract high ticket loans. We have introduced special schemes for about 10 lakhs, above 5 lakhs, above 1 lakh, etc. And these are yielding results. And we are confident to get back these customers in a few months from now.
Sure. And what is the lowest lending rate that we offer on these products, sir? And any thoughts in terms of elongating the tenor from, let's say, 3 months to maybe 6 months or 9 months for some of these higher ticket size loans?
Yeah. So in some categories, we see the need. Accordingly, we have extended the tenure of these loans. So when we see the customer profile, but because they are of little more formal in nature, so that we are doing.
Okay. And just last one, sir, what would be the penal interest that we collected in this quarter and last quarter, Q4 FY21 and Q1/22?
In gold loan, we don't have any penal interest. We have some slabs. Yeah. So for the first 2 months, thereafter some slabs are there.
Understood. Thank you. Thanks, sir.
Thank you. We have the next question from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Hello.
Please go ahead, sir.
Yeah. So you have given the number of new customer activation or acquisition in Q4 and in last few months. Can you give that same number for Q3 and Q2 also? Because Q4 was also a weak quarter for us. Our loan book had not grown in that quarter. So how has Q3 and Q2 been in terms of new customer acquisitions, and how is the current trend versus Q3 and Q2?
See, it has gone down, and now we have come back to the January, February level. So it is steadily improving, and hope to reach a level of around, on an average of 5,000 customers plus new customer acquisition in the coming months, probably from this month itself. We hope we will reach that level.
Okay. And second question, so now that...
It is the pre-COVID level.
Mr. Mantri, I'm sorry to interrupt, but we have participants in the queue, so if you could come back with your question.
I've only asked one question, so can I ask the second question?
Please go ahead.
Yeah, so now in terms of yields, now given that you have started becoming a bit aggressive in terms of on the higher ticket side, so will the overall yields be trending downwards on the overall portfolio?
Yeah, there may be some contraction in the yield by 1.5%, which will be compensated with the growth. So the profitability, we don't have much worry, because we have the confidence that if at all the yield depression is there, it will be compensated with the growth. And also,
thank you very much, sir.
With the growth, the ROA also will come down.
Okay, thank you very much, sir.
Thank you. Before we move to the next question, we would like to remind participants to restrict their questions to one during the initial round. We have the next question from the line of Rajiv Agarwal from Sterling Capital. Please go ahead.
Sir, this 1174 crore restructuring we have done, was there any provisioning? We have not done any provisioning on that? Hello?
The provisions as per either Ind AS or RBI provisioning, so we are following the provisioning norms.
Oh. So do we? So in the coming quarters, there may be some provisioning, or this, if the recoveries are not sufficient, will there be? Can we expect some provisioning on this also? 1174 crores.
Yeah, we believe that this quarter is the bad quarter in terms of lockdowns, etc. Our team couldn't go for collection. And we believe that if the COVID issues are not there in future, the coming quarters will be better in terms of provision. So as you are aware, last year also we took some aggressive provisioning in Q1, and the P&L impact has come down in the next 3 quarters. So this quarter also we believe that we took upfront provisioning, and if the collection efficiency, as we are getting a better trend in Q2, we believe that the provisions should come down.
Okay, and one more question. This 122 crore provisioning we have done on a consolidated basis. Can you just give the breakup?
So mainly it is MFI 90 crore, and the standalone entity 30 crores. So that is 120 crore. Then the balance is housing.
Okay, thank you.
Thank you. We have the next question from the line of Chirag Sureka from DSP Mutual Fund. Please go ahead.
Good evening. I can imagine with the pandemic and shutdowns, it's very difficult to predict the MFI business. What I wanted to know was, Anantkumar sir, you had mentioned that the informal sector has also picked up. So are the customers at least making part payments, and is the business still alive? Because there might be provisions and credit costs now, but eventually is the customer business still holding good?
Yeah, in the MFI business, our major focus now is collection. That's why the collections has gone up to 95% now, as mentioned by the CFO there. So as things are opened up and getting opened up, the things will fast improve. Only the worry there is a predicted or anticipated third wave. If third wave is not there, things will be better. So even with the worry of third wave, our emphasis is more on collection. We incentivize the employees also, and so the collections are fast getting better.
So what I wanted to ask was, the customer's underlying business is still picking up, right? With that has not been wiped out.
See, when things are opened up, they are getting the benefits are fast going to the bottom of the pyramid. So their business are getting fast back to track.
Good to hear, sir. Thank you very much, and good luck.
Yeah.
Thank you. We have the next question from the line of Prateek Agrawal from ASK Investment Managers. Please go ahead.
One more question. That 1,500 crore that got auctioned, what do you expect would be the behavior of those clients? Will they come back, or that is client attrition?
You see, in gold, when these are auctioned, the customer has no much pain against in this, because he has been informed several times. We did everything.
No, that is fine.
Help him to redeem. See, another thing, those customers are those who don't have the money. And when these are auctioned, the surplus is refunded to them. If they sell it in the market, they may not get this much of surplus from this. So we don't have much complaint about that, about the auction, because these are all very transparent and with his knowledge only, inviting him also for the auction.
Yeah. Understood. It's just that maybe those customers will become customers again after a long while. So they will have to again accumulate.
They will come back because of this, the transparency and communication with him. The chances of coming back is very high. And most of them, 80% of them come back. That's our experience over the last several years.
So, sir, over last 1 year, if you see your other competitors, they have grown, while they have degrown last 1 quarter by a small amount.
See,
but we are down majorly. So,
that is why I told It is primarily because of the product structure. Ours is 3 months, and whatever we have learned at the highest price, we have phased these out. We are far ahead of others in the market with regard to managing the price risk. Now, the 1 year product, I am not telling about competition. Whoever is lending for 1 year, they will face the real heat after 9 more months than what we faced. During that time, we have seen we are able to witness growth. We are compared with some of the NBFC players in the market, and from 2013 onwards, if we take 14 onwards, the growth rate has been the same. During Demon also, we have auctioned on time, so we are able to maintain the yield. And after the auction, till 19, we have seen the same growth. So it is because of the product structure, 3 months, and the market 12 months. It is because of this only. You will witness this in the next 2-3 quarters.
And lastly, somebody else also asked this: is 3 month structure way too conservative? Can we do something like a 6 month structure for everybody? The 3 months with the calculation that's there, you are always in money. So it's a very safe, very good product for the house. But maybe for the borrower, is it friendly enough?
For stressed borrower, it is 6 months only, because 3 months is the contract period, and the auctions are being conducted in another 3 months after the maturity of the loan. So in fact, for the stressed customer, he will get 6 months. The second thing, see, if the customer pays interest in full,
I understand that.
Market, he gets another 6 months.
Yeah. No.
In fact, it is 6 months only for the first customer. So, what these customers, if there is some sort of pressure in the interest collection, this is for interest collection only. 3 months means 3 months interest, at least in 6 months, he has to pay the interest. Only if the interest is collected in 3 months or between 3 months and 6 months, he will be able to pull on these loans and redeem it through his cash flow. So 1 year product, these customers will tend to accrue the interest, stressed customers, and ultimately they will leave it.
No, sir, sorry to dwell on this, but for example, last year, the prices moved up, and for people who had a longer period, this thing, they could keep on accumulating interest for a length of time and show growth. Whereas for you, it becomes mark to market very quickly, and people will reduce their tonnages with yourselves. Right. So in the period of rising gold prices, your gold tonnage growth will almost definitely lag everybody else. So people are, they will come back after 3 months, give you as much gold as is required for 74%. While the same thing will happen to somebody else's borrower after a period of a year. That was what was in the mind actually.
See, what about the money lent during the highest LTV period? So see, for them, today's receivable is much higher than the current price, ruling price.
Yeah.
That also should be understood.
Yeah. No, fair enough. Sure. Okay, thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I would like to hand the floor back to the management for closing comments. Please go ahead.
So, thank you. We are always open to the investors for any discussion or query, answer any query from all of you. We are available. Please do call if you want more details. Thank you. for attending the call. For Mr. Alok, thank you for arranging the call. Thank you all the attendees once again.
Thank you.
Thank you, sir.
Thank you, members of the management and Mr. Shah. Ladies and gentlemen, on behalf of Monarch Networth Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.